So you got, sorry, I don't know why that last video cut out. But anyways, you know, this is a quality level because of how price left it. So again, you know, we get this rally, and then you get the basing candle um, right here, this little red doji sandwich right here. You get this red basing candle, and then you get another huge rally out of it. So this little area, this little basing candle right here is very powerful. So it's powerful because of how fast price left this price point right here. It's powerful because price did not last very long here, which tells me that there is a lot of pent up demand there. You know, I can go back and I can show you guys other levels of demand, you know, that are low qualities, but again, you know, you want to focus on higher time frames. I mean, you know, just looking up here, you have, you know, here's another setup. You have a rally, base, and a drop. Like I say, how the market likes to always come back to the origin of a moving price, to basically fill those orders that did not fill originally on the original sell. So in this instance right here, by this pivot high, let's call it 1836, the market was moving up very strong, right, from this level of demand right here. You know, we had a huge rally out of it, and then we saw sellers begin to step into the market. So from 1836, they were able to push price down from 1836 all the way down to 1450. So for the market to be rallying really hard from down here from 13 all the way up to 1840, and then all of a sudden it bases right here, and for it to sell down that viciously and that fast, that tells me that, hey, you know what, there must be a lot of supply there for it to basically reverse the market and for it to turn on a blink of an eye like that. So that leads me to describe and explain my next setup, which is a rally base drop. Rally base drop. These are bearish setups and reversal patterns that form, and this is a very powerful structure when it's printed on a higher time frame, such as, you know, 2-hour, 4-hour, daily, and especially weekly. So what I do here is you get the rally base drop, and it's the same thing for what I did with the rally base rally. I look for the open, or I look at the body of the basing candle before price sold off. So in this case, you know, I could draw it, my box starting from the wick low here, or at right here at the, you know, at the body of the basing candle. So I draw it at this level here, and I would extend it up to the wick highs, and my stop loss would be a little bit above the wick highs, so somewhere, I don't know, somewhere around here. Remember, it's all relative to your risk. So with this setup, you know, you want to be patient with it. You know, price is gonna, you know, sell down. It's gonna go up, down, and then eventually you're gonna get a move back to the origin of the sell. Because remember, the market always likes to make its move back to the origin of a move in price. So I would wait for the market to move back up into supply here, and this makes a very high probable trade for the short side, because if if this structure can print on like a daily or weekly chart, it's very powerful, and I would take the short up I would take the short trade every single time, as long as it's a fresh move into the level, meaning that this is the first touch into the level of supply. So if this was tested multiple times and, you know, price came down here, tested it again, I wouldn't take the trade because it's no longer fresh. I would only take it on the first tap, because that's going to be your most explosive and stronger reactions. But anyways, I would look to short it, and I would expect price to make its move back down to demand. So knowing what I just explained to you guys there, here is a clear setup right here. I'm going to go over it again. So from the rally base rally imbalance, it took off, right? And look what happened, guys. It sold off from 1830 to 1450, forming supply. You get the rally base drop. You get the rally, you get the base, and then you get the drop. So how I would draw my level here is I would look, and this is the origin of the sell, right? So what I would do is I would do exactly what I told you guys up there. I would look at the basing candle before the sell-off. That would be this green candle right here. So I would take the open of that candle right there, and I would extend my box from the open to the wick highs. And my stop loss would be, remember, a little bit above the high. So let's call it, I don't know, 1860 maybe. It just depends on your risk. So that would be my stop loss right here. Let me stop. So that'd be my stop loss right here. And I would look for the market to make its way back up into that supply zone, and I would look for a short trade. So again, we sold off very hard from this origin of the move here. We sold off, so right away I know that there is a lot of pent-up supply there for it to reverse price that fast and that sudden. So we get the sell-off, and then we get the manipulation higher right here. We get the little, we get that pivot low to form. And then the market rallies up into supply, into the origin of the sell. And look what happens. You get the overshoot, and this represents sell orders hitting the market in this fresh level. And then look at where price sells off to again. It's going to sell off to a fresh imbalance. So obviously, at this point in time, we did not know. So if we're looking, from behind, this was still a fresh imbalance, and it was one of the stronger ones. And if you notice, the market made its move from supply to demand. There are some smaller time frame level of demands here, like there's the demand zone here that worked, but it's not quality because look at all this congestion here. You see this? Sorry, this is all congestion here, guys. This is not quality. That's all congestion. This is not quality. Look at the difference between this demand right here, and then look at the difference between this demand right there. You get no cluster of candles here. So obviously the demand here is going to be way more powerful than the demand that's in this cluster of candles here. So nonetheless, we get the market to form supply above at the 1770 area. We get the move up, form supply here. We get the move down, and then you get the manipulation up to the fresh supply zone here. And then the market makes its move back down to demand here, and then at that point we get a move up. So in the future, if Snap ever makes its way back up to the $20 level, I'll be looking to take a short up in here, obviously. When I talk about fresh level, guys, this is exactly what I'm talking about. So let's look left at this imbalance, the rally-based rally imbalance that I explained earlier right here. Look at the original reaction here on a fresh zone. And now look at the market coming in to test it one more time here. This could bounce. It's not going to sustain though. Why? Because all of the demand that filled on this test is most likely filled because they took price up from $12.70 all the way up to all-time highs, up to nearly $20. So this demand right here, this was a fresh touch. I would take it every time. This second test here, you could see that they filled a little bit more buy orders here. But look at the volume. Look at the volume here. Look at how minimal it is. Look at the volume when it happened on a fresh touch in this zone. Look at the volume now. Look at down there. Massive institutional activity. Why? Because you have, think about it, you have the market is selling off after a big drop in price. So you have market participants selling after a big drop in price into a level of demand. Every buyer, there's a seller. Every seller, there's a buyer. The big boys suck up buy orders at this level while the other side is selling to them. And once there's no more supply for them to suck up, you get this massive reversal in this level. So this is what I talk about when I say that at the origin of the imbalance, you get little volume activity, because it is a very illiquid area, meaning that all the orders are on the buy side. So over here, you get minimal volume activity. On the sell-off into that imbalance, you get the massive institutional activity and that's representative of the elevated volume, because you have, because the big boys, they can actually fill their orders because you have the market panic selling to them, and they take advantage of that and they buy it up because they need to have people panic sell to them in order to fill their massive buy orders. takes it up, and then look at the difference in volume now that we entered a level that was tested already. The majority of the demand is already filled, and they obviously sold up here to form that pivot high. So obviously up here, you know, there's going to be a lot of pent up supply, and I would obviously be looking for a short position in the future. So that is another setup. And again, you know, this works in all time frames. You know, I could show you on a weekly chart how this would function. You know, I could tell you why it sold off. So for example, here's another example right here. You get the market selling, formed a minor pivot low here, and then it's rallied up again, and then we get a rejection, right? So for price to move from $11.28 and to rally all the way up to $21 and to viciously make a strong move down, that tells me that there is a lot of pent up supply at this level. That's why pivot highs and pivot lows are very important, because they represent areas where the banks and institutions are buying, selling, or taking profit or reloading. So judging by this action, for the market to reverse down from 21 all the way back down to $5 tells me that there is a lot of supply. So that's why if you look on higher time frames, pivot highs and pivot lows are very, very useful tools. And again, it's the same way how I draw it. You get a rally, base, drop. Now how I would draw this is I would take the open of the candle prior to the drop. So over here you don't really have the structure, but you could still take the open of this bullish candle here and draw it right here at the open. You could draw it from there, and then you could extend your box to the highs. So this is a rally base drop demand zone. You could extend it out to there. Let me get my drawings out of the way. 1 second. Wow, way too many buttons. 1 second, guys. Delete these buttons here. All my made up candles that I drew here. Okay, same instance, guys. This was a pivot high formed by the banks taking profit here and selling. So again, rally base drop, and the origin of the sell is right here at the rally base drop imbalance, and you get the market to sell off, and then you get the relief rally back into supply right there, and we actually hit it almost perfectly. You know, you get the market to relief rally into this level here. You get a lot of people who are bullish on Snap, and they are buying the dip, and little do they know that they are literally buying into a major level of supply here where the guys are selling, because at this price point the market sold off way too fast for them to execute their sell orders. So you still have a surplus of sellers waiting here because it's a fresh level at the time. Market pulls up into it, and you get the sell-off going down here, and it sold off into a used up level of demand. So the idea is that the market's going to break this used up level of demand, which was this was the rally base rally imbalance. You can't see it now because we're on a weekly chart, but it's most likely going to make its way down to the next level of demand, and the strongest level of demand comes from the origin of a move in price. So obviously this is the origin of the rally, and again, it becomes very subjective, but I would just take the open of the candle before the rally in price, and I would just draw my box here. I mean, I'm sure I can go into a smaller time frame and then show you guys precisely where the imbalance is, but you know, I'm not going to worry about saving 20-30 cents of my risk here, because this is a no-brainer here. If Snap ever makes its way back down to this level, I'll be going heavy long. But for example, you know, I'm gonna draw you guys a couple of fresh imbalances here. I mean, here's another rally base rally right here. You get a rally base rally. So here is the basing candle right here. Let me just put some letters. Rally, base. Rally, base, rally. And you can see that price forms demand here, and you get the little rally out of that demand zone, and then you get the manipulated sell back into demand to fill their buy orders that didn't fill on the first touch because price took off too fast. It sells back into here, creates this wick right here, which represents buy orders filling the market, and then it continues to take off. So that's a rally-based rally imbalance here, and I would not be looking to get long in this level because it is obviously not fresh. So I would wait and look for a fresh zone. But here's another example of it working. Rally-based rally. And again, guys, it works on all time frames. It obviously holds more significance on a higher time frame. But, you know, if I went into a daily chart, I could show you guys many imbalances. I mean, so here is a rally-based rally. You get a rally, and then you get that consolidation before the gap up. Rally, base, rally. So here I would again draw my demand from the open of the candle prior to the gap up. So this is a rally, base rally. So my open would go about right there. Now I would draw my demand zone from the open of the bearish candle prior to the gap up, like that. And again, we get the the massive move up, and you get the sell back to the origin right here to demand into the rally-based rally imbalance, and then price takes off. So I'm gonna predict a move here just so you guys can see whenever I go back to it, just to refer to my video, that there is another rally-based rally imbalance here. You get a rally, base, sorry, you get the rally, the base, and the rally, and that comes from this level right here. You see the structure? I draw it from the open. You see price rallied and it based here. You see, look at this little like consolidation period that didn't last very long. So here's the structure, rally, base, rally. I take the open of the bearish candle prior to the gap up, and I would draw my level from here. Whoops, wrong box. And I would draw it from here and extend it out to the right side. So like this. I would extend it out to the lows here. So now that Snap is trading inside a used up demand zone right here, where I have my yellow circle in this area, it's more than likely going to break this demand zone and it's going to go to fresh demand. So it's going to most likely make its way down to this area. And we should see a bounce up out of it, which could present a nice scalp opportunity. But just remember that ultimately, price likes to make its way back to the origin of moves. So this level right here should present a nice bounce for Snap in the near future.